Nebius is trading above $205 in pre-market this morning. Thursday's high was $195. I have stopped hedging on this. I have reasons to believe there is a 70% chance the low is already in. If you hold chip or AI infrastructure names, or you're wondering whether Thursday's bounce was real, here is the actual case. 5 specific things, not a vibe, and 1 live stock this morning that tells you if they are still holding up. First, a hedge fund called Situational Awareness, run by 24-year-old Leopold Aschenbrenner, sold most of its roughly 24 billion AI stock portfolio to Citadel this week after leveraged losses triggered margin calls. That's mechanical selling. Falling prices force sales, which again force prices further down. When that fund sold out and cut its leverage, it broke the loop. That doesn't create a bull market by itself. It just removes the single biggest reason for another sudden waterfall. Second reason, the Nasdaq finished up 2.78%. The semiconductor index closed up 8.2%. Nebius closed up 27%. Micron finished the day just 1% under its own session high on nearly 62 million shares of volume. A squeeze about to fail usually fades hard into the close. This one didn't fade at all. Third, today prices are still climbing. Nebius trading above Thursday's high, not below it. A real failed bounce shows up as a weak next day gap down or straight selling. Buyers paying more the very next morning is the opposite of that. Pre-market volume is thin, so I am calling this early evidence, not proof. Fourth, the bullishness spread past one fund's holdings. Nvidia and AMD are higher. Samsung and SK Hynix jumped double digits in Korea. If only Nebius and other names that the fund dumped were bouncing, I would call this pure liquidation relief. But an entire industry on 2 continents moving together is a lot harder to explain as one fund unwind. And fifth, the fundamentals actually back it up. Microsoft's cloud business accelerated. Amazon's AWS grew 37%, its fastest pace in 18 quarters. And Amazon raised its 2026 spending plan to $220 billion. Because memory is still tight, not because they are being cautious. Samsung posted record profits on the same memory shortage story. Lam Research, a chip equipment maker, just guided its next quarter up 30% year-on-year. Add all these up and think about it. I believe there's a 70% probability that this bounce is real, and we are back to the races. But a 30% probability still says that the last 2 days are mostly short covering that fails once the easy buyers are done. The thing that would change my stance is simple. If these stocks fade hard over the next 5 to 10 days instead of holding the price or going up further. This is where I start looking for the setups that I would like to get into. Follow me if you want to know which stocks I'm looking into.